Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, July 20th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. Please do your own due diligence. It's your money. It's your responsibility. Again, I'd like to remind everyone, we're trying to expand the show, trying to get more viewers. You can help us out if you enjoy watching this program every week. You can support us by hitting that bell button, liking the video, commenting. Also, we do have the Actionable Intelligence Alert free newsletter that goes out every week. It's a once a week thing that I put out on Monday or Tuesday. It basically has a potpourri of various videos I've been watching, podcasts I listened to, articles that I found interesting, memes, what have you. So that's free and available. And then if you like the or interested in the themes that we talk about on this weekly video as it pertains to investing, please consider a subscription to the Actionable Intelligence Alert paid newsletter, where we talk about specific ways to take advantage of the themes we discuss in this weekly video series. All right, that's it. Let's get started. So from X, the guy that we follow, Charlie Bill Ello, 94% chance of rate cut in September. He says the market is now pricing in a 94% probability of a Fed rate cut in September. And every single FOMC meeting since 2009, the Fed has done exactly what the market was pricing in entering the meeting. Unless the odds change, a rate cut is coming. We know that. Just wanted to point that out. The bazooka is coming out. Again, I don't think it's going to be positive for the equity market, because I think that the reason they're cutting rates is because they see a recession coming. I also think that people are talking about, well, they're only going to have 1, 2, 3 rate cuts. I think that there's a good possibility that the economy is already in a recession. Okay. I think it's going to become more evident as the data keeps coming out, as unemployment goes up. If you go back and look at the data, you will see that when the Fed cuts rates, they typically cut 400 to 500 basis points. That's 4 to 5%. And so that's usually because there's a recession going on or some kind of economic crack up, crisis in banking, or something blows up. So I don't see that right now, financial crisis. I just see a garden variety recession, but we'll see. We've had a tremendous amount of government intervention in the economy, from fiscal spending, giving free money out. We really had the last 3 or 4 years were really hard to forecast or discuss the economics, because things were so distorted by the pandemic and by the government response to it. So we'll see what happens. But again, the whole world now is basically in a synchronized rate cutting cycle. So I think that ultimately over the next year to 18 months, that's positive for the themes that we're involved with. Obviously, there'll be volatility in there. There'll be variableness. But I think in the end, money printing, leads to higher gold prices and resource prices. But we'll see. So Game of Trades, somebody we follow on X, delinquency rate of multifamily housing. I like putting out showing these or re-showing these, sharing these charts that are just like visual stunning. I mean, you go back to the great financial crisis in 2008, and you're exceeding that now. Okay, so we had this spike and then it pulled back, but now we have another spike. So it says Freddie Mac serious delinquency rates for multifamily housing. That's not good, obviously. Again, Game of Trades, record credit card defaults at record levels. We know why that is, right? The free money, the excess savings is exhausted. The inflation, people's purchasing power has declined by 20 to 25% because of the inflation due to the pandemic and the government response to that. And people are out of money now, so they've turned to credit cards just to live. Just to give you an example of how tight the banks are now, one of the things that I do as a hobby, all my travel is pretty much free because I do credit card churning to get the points, to take advantage of the points that they offer. I know how to do that in a way that doesn't really cost me any money, and I kind of do it as a hobby. And so I'm able to travel free. And so what I'll do is I'll have different websites to go to, and I see different offers will come. So credit card companies will say, okay, get this particular card, and if you spend $5,000 in so many months, like 3 or 4 months, you get 50,000 airline points or something like that. So I do that, and I know how to do the manufactured spend, so I can spend money without actually spending it. There's a whole way to do all this. There's a whole subculture of people that do this. So anyways, the point of the story is that I have a very good high credit score. My credit score is like 840 or 835, something crazy like that, which is near the top. It took me a while to get there. I'm not bragging. I'm just showing this for illustrative purposes. So I was trying to take advantage of a deal the other day to get like 100,000 points or something, and I got rejected. So I have an 840 credit score. My credit's impeccable, how I manage credit, and I was rejected. And they solicited me. I didn't solicit them. So that shows you how tight credit's getting. And so the point I'm trying to make here is if somebody with an 840 credit score got rejected for a card, what's going to happen to all these people that have like 580 or 620 or struggling or living off their credit cards, making minimum payments, and then they lose their job? They're sunk. They're sunk. And so this is why I think that we're probably already in a recession. Again, you're not going to know you're in a recession when you're in it. It's declared after the fact. But I just think a lot of the data points are showing that. Now, I don't know how deep it will be. We're seeing the unemployment rate creep up. I think it's obvious. But, we'll see how bad it gets. We'll see how much money printing and how much the Fed does. It looks like we're going to have a change in administration and possibly Congress. We'll talk about that later in the program. But all these things can affect everything, right? So we'll see, what are oil prices going to do? So anyway, I definitely think that, when this is the reason I like showing these charts, because they show like in previous recessions where you were at, and you're exceeding those levels in a lot of these data points. And you're like, okay, well, if we're not in a recession, we're certainly close to being in one, right? So we'll continue to monitor, but this is what I think is going on. And so I think it'll become even more apparent. They're not going to want to talk about any of this, especially the state media, propaganda organ, which is the mainstream media. Everything's wonderful. This is the best economy ever by the bestest president ever. So you're in an election. So they're pumping this thing up, and that's going to skew things. Let's put it that way. So I wanted to talk about this. I might have already shared this chart a couple weeks ago. I don't remember, but I saw it again, so I thought I'd share it. Basically, this is from Bank of America. It says new tech, big investments, booming productivity, and bursting stock bubbles. So the excuse that this AI thing is going to create productivity, it's going to create a boom, blah, 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 blah. We've heard this before. And in many cases, we have incidents in the past where new technologies have created booms, and they have been created higher productivity, and they were new technologies, and several examples are given here, and they did cause run-ups in those particular stock sectors, right? And it was the same outcome. The thing gets over its skis, the FOMO kicks in, people get overexcited and bid these things up to irrational levels, and then they correct. And so, for example, they use an example of the shale revolution, the shale boom, the tech boom, lead up into the tech wreck in 1999, 2000, and the railway mania back in the 1800s, which opened up the West. So these were all major things that caused big changes in the country. They end up being great positives and raised productivity and raised wealth. But the stocks got ahead of themselves and they created bubbles. And so the point is, it's the same thing with this AI thing. And I've pointed this out over and over and over. And it's interesting to watch people. I don't debate people. I know what's going to happen. It's just, how high does this thing go before it breaks? It may have broken in the last couple of weeks. We will only know in hindsight. But it's interesting to watch people justify the overvaluations. It's mostly by people that have made a lot of money. People have made life-changing wealth in this run up, okay? And instead of selling out and taking their money and you know, doing like that, drinking the champagne and sailing off into the sunset, they want more. They don't know when enough is enough. They don't have enough self-introspection or EQ to know, okay? And this is what I saw at the tech wreck. I worked at the Amoco refinery, BP refinery. BP had bought it in Texas City. And there were guys in there. This was right around the tech bubble. It was in the tech bubble. And we had guys in there, they would be telling you how much JDS Uniphase was up or Lucent, and they were multimillionaires on paper, which they were. Many of them were. And a lot of these guys didn't even have high school educations, but they worked. It was a good paying job. Hey, if you work at a place 25 years and you put money away and you catch a boom, there was a certain, I think it was a Merrill Lynch office in Texas City. A lot of them had financial advisors over there. And I saw people ride the tech thing, this slide from the top to the bottom, ride it all the way down. People that were millionaires on paper that ended up with less than $100,000. I remember we ended up hiring an administrative assistant after the tech wreck. I forget her name now. She was a super nice lady, and her previous job, she was like the person that answered the phone, or the first person you would counter over at that Merrill Lynch office in Texas City. And she had a nervous breakdown because as the stock market was crashing and all these refinery workers and hands, I mean, these guys, every other word's the F-bomb. I mean, they were taking it out on her because the financial advisors would go out the back door or wouldn't show up for work or wouldn't take the calls. And, these people were mad and upset. They didn't understand they were in a bubble. They didn't understand. I'm sure the financial advisors were telling them, no, this is a new era. Stay in the market. And then when it was going down, I remember telling these guys, get out. They would get mad at me. They would start, we'd be on shift sitting there in the control room, and I would be like, that's why I don't like have these conversations with people that are like, have a low EQ around this stuff. I mean, they got lucky. They didn't understand that they weren't good investors, that they had been in the right place at the right time. And that's fine. That can work for you, but you have to understand that, and you have to take your money off the table. When you have life-changing wealth and your life has been changed, and all you have to do is hit the sell button, you have to do that, guys. If you catch a wave like this, you got to do it because it's going to come back to earth, right? Creative destruction. These companies cannot they cannot keep moving up when they're tremendously overvalued relative to the rest of the market. And historically, it just will not happen. It cannot happen. Now, that doesn't mean that this euphoria and bubble can't continue for some period of time, but in the end, it will burst like they always do. They always burst. They have written books about this, about manias and panics and bubbles, and every single one, time after time, the same rationalizations used by the market participants that end up getting washed out. So if you've made millions of dollars and your life has changed, kind of take the advice of John Goodman in that movie, The Gambler, right? Get yourself a house 30 with a pure roof, pay for it. Get yourself a Japanese crap box that you can drive for 200,000 miles and put the rest in the system at 5%. I mean, that's good advice for the average person that caught a wave, but unfortunately, a lot of people won't do that, and they're going to give back a lot. And again, I saw it myself, and people actually were mad at me for pointing it out, because if you go from $2.5 million to 100,000, and then it's not even funny, it's sad. These guys were set for life, and this is 25 years ago. So $2.5 million was a lot of money compared to what it is now. They were set for life. They were at the end. Plus, they were going to they were on defined pension plan, a lot of them. So they were set medically and just their, pension, and then having this extra amount of money that was just going to give them certitude and security for the rest of their life. And they wrote it down because they were greedy. They were greedy. And I remember this, one guy, it's going to come back. His big thing was Lucent Technologies. They were a telecom company. And it went from like, I don't know, I don't remember what it peaked out. Let's say it was like $100 a share. It went down to like $1.50. It's going to come back. I just felt so bad for the guy. The guy was just clueless. And so I just said, well, yeah, more than likely, I just shake my head and say, yep, probably come back. And what can you do at that point? I mean, the people didn't listen. And it's not that they should listen to me, but I wasn't the only one saying this, right? This is before I was even more educated on this stuff. I mean, I have a lot more experience now. Like I said, that was 25 years ago. So yeah, this is not going to end well. So Jesse Felder, another person we follow on X, he's quoting this Albert Edwards quote, "There are few of us left who were in the industry during the 2000 NASDAQ crash. I was there, and the one thing I have learned is not to be complacent. Bad stuff happens, and the warning signs are there if you look for them." That's my whole message. And so this chart was put along with this tweet. It shows the U.S. Information technology as a share of total market cap. We've exceeded the tech bubble. So basically, U.S. information technology as a share of total market cap of the market is higher than it was during the tech bubble. That doesn't mean it can't go higher, but you saw what happened last time, and something similar will probably more than likely happen this time, because it's never different this time. So I just thought that I would point this out. I hate to, eventually it's going to be an "I told you so" thing, and then of course, there's always going to be some wag in the comments that says, have fun staying poor. You don't know what you're talking about, boomer. Okay, well, maybe I'm wrong this time. I doubt it. When you have the force of history and multiple, I'm talking about dozens. They have books about this where they point out dozens of bubbles going back to the South Seas bubble in the 1600s, and how Newton got caught up. Sir Isaac Newton lost his fortune in one of the bubbles. I think it was the East India Company bubble. I can't remember. One of those bubbles. He actually got out and then got back in, and that's how he lost. Even Stan Druckenmiller talks about how he got sucked into the bubble of the back in 2000. He just couldn't help himself. And when he was out, he knew it was a bubble and he couldn't help himself. And he went in anyways, because he thought he was going to be too cute for by one, and got hit. And he writes about that. So it can happen to anyone. You get caught up in this stuff, right, guys? This is why emotion and psychology is so important in this investing sphere. It really, to my mind, is one of the most important things. I wrote an article about it on my Substack, which is free, pointing this out. A guy, I think Mark Sellers, gave a speech to Harvard MBAs, and the speech was, so you want to be the next Warren Buffett. And then he explained why that wasn't going to happen, regardless of the fact that they were Harvard MBAs and some of the most intelligent people on earth, that maybe 1 out of 100 of them would be somebody that could compound wealth at 20% plus a year. Okay. And so I think it's worth reviewing that, because he then talks about the 7 traits that are required to be a serially successful compounder of capital. Now, what he wasn't saying that no one can be a good investor. You can be a good investor. It's just like playing golf, right? If you go out and practice, you can improve your golf game, but very few people are going to be on the PGA Tour, no matter how hard they work, no matter how athletic they are. If you don't have the certain required traits or endowments, you can't hit major league pitching. I told this story the other day. I was listening to an interview with Ken Griffey Jr. He's a pretty good ball player, I think, during the 1990s and early 2000s. He said, I think heard him say in an interview, I think I heard Barry Bonds say this too, that when the ball left the pitcher's hand, they could see the seams. They could tell where the pitch was going to go, like automatically. They didn't have to think about it. Just their mind already knew where in the strike zone, where that ball was going to end up, just based. They could see the actual seams on the ball, and they didn't have to, it was automatically processed in their mind. So you're born with some stuff like that, right? And one of the points that Sellers was making about being a top investor is it's kind of ingrained in you by the time you're like 10, 11, or 12 years old. And if it doesn't, then you're not going to be that person. A lot of it has to do with psychology and some other things. But again, you can hone your craft. You can be a good investor, an excellent investor, but very few people are going to be to that level. So anyway, and most people, as I've shown many times, if they are active investors, drastically underperform just putting their money in a, low fee Vanguard S&P fund. Most people should probably just do that. But everybody wants to take a shot, and it's easy to do with your phone, so that's why they do it. And this is how these bubbles happen. So here's a contrarian indicator. Defensive stocks are out. Of course, FOMO, Mag 7's in. It sucked all the oxygen out of the room. So basically, from top-down charts is another guy that I follow on X. Excellent charts, by the way. Investor allocations to defensive stocks. What are defensive stocks? Healthcare, utilities, consumer staples. These typically do well during times when the stock market is weak. And what has happened is you've seen less participation in these defensive stocks as, again, Mag 7, AI, data, IT has sucked the oxygen out of the room and the capital into the black hole that is this tech bubble. And so investor allocations to defensive stocks have reached yet another record low, partly because growth stocks are doing better, partly a sentiment contrarian signal thing. Yeah, I agree. So this is an example of this going back to the tech bubble. So this is when this red dotted line is when the tech bubble rolled over. Tech is represented in this light blue line. You see it was doing very well, coming up to the top in March of 2000. And what was doing poor during that time? Consumer staples, utilities, all of these things, healthcare were weak because money was rotating into what was working, FOMO. I don't want to miss out. I'm a portfolio manager. If I'm in consumer staples, I may be right down the line here, but I have to be right here or I'm going to lose my job, right? This is part of the problem. Okay, this short-term mindset and the fact that most of these people are asset managers, right? And they get fees for having assets under management. And so more assets under management gives you more fees, right? And so you have to perform. If you underperform the averages, if you underperform your peers, people are going to take their money out and go with the hot hand. I'm telling you, that's how it is. Again, I see it in the newsletter business. If we have a down quarter, or the things that we're invested in longer term, which are mostly things that are contrarian bets or things that are inflecting, things that are going from terrible to less bad, people don't have the patience to sit there and let it play out. And so you'll see subscription revenue go down. But then again, when these things come back, when uranium goes to 106 and it's all over X, then the subscriptions pour in. So this is how it is. People aren't interested. I put the articles up anyways on how to learn, what makes a good investor, blah, 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 blah. But people aren't interested in that. I talked about this the other day. I was interviewed by Jesse Day with Josh Young. It'll be out Tuesday for VRIC. And we talked about this. And I said, people, maybe I talked about it before we got on there. I talked about the fact that I used to be in these Greyhound racing syndicates where we owned the Greyhounds. And I never really gambled on too much on it. Yeah, I put some money on my dog just as a fun thing, but I wasn't a gambler that goes to the track every day. But I remember going in there, you see these, this is before the internet, or before phones. So everything was like these mimeograph tip sheets, right? These degenerate gamblers, they want to try to get an edge. So they're buying these tip sheets, right? And they would sell them for $1 or $2. And I'm thinking to myself, okay, how's this working right out for you? And it's not. And so that's what a lot of people are looking for. There's tried and true ways to become extremely wealthy. Okay. And one of those is in real estate. That's what I think the average person should really look into. Just buy a rent house every year for 10 or 15 years. You'll have 10 or 15 properties. They'll pay for themselves. You'll be set. That's one way to do it. The other way to do it is start a business and run it, or invest in other businesses. And you can do that. You can buy businesses. I've told people that there's this baby boomer turnover of people that have these businesses that are doing $2-3 million a year, HVAC business, plumbing businesses, what have you. They want to get out. They're willing to sell. You can do that, roll those up, whatever. Or you can participate in businesses in the public markets. That's what investing is, okay? It's buying portions of businesses that are going to do well and that have the ability to compound capital over long periods of time and buy them at good valuations. That's how you become wealthy. People don't want that because that takes time. That takes effort. They want it now. Hey, all I have to do is drive up to the Chick-fil-A. The guy stands there, takes my order. I give him my credit card. 5 minutes later, I've got the, Chick-fil-A club sandwich and waffle fries. I'm good to go. Well, that's not how investing works. And so everybody's looking for the shiny object, the thing that's going to go up. Where's the next NVIDIA? Where's the next Bitcoin? My ex-brother-in-law, who's the biggest schlub in the world, was bragging at the last Thanksgiving dinner, family dinner, how much money he made in NVIDIA. He's a schmuck. If he can do it, why can't I do it? Well, he got lucky. That's all. If you get lucky, are you a good investor? Did he keep it? Can he do it through multiple market cycles? Most people can't. And that's how real wealth is created in the stock market. So anyways, getting back to this, you see that as tech peaked right here in basically March of 2000, and you had the bubble pop, and I'm not going to get into all that. You can go back and look at the news articles. Then what happened? All of these money rotates out, gets out because get me out of this, it's going down, and it goes back. It goes into other sectors, right? It goes into consumer staples, utilities, healthcare, that type of situation, right? It'll go into bonds. Hopefully it will go into, we saw rotation into value stocks, which is our sector. Initially, I think if you have a crash event, everything's going to go down for a certain period of time, but then the money printer go burr kicks in, and I think a lot of our stuff's going to do well. So anyways, I wanted to point this out because this is what you can expect to see. So I wanted to talk about this chart. This is from RBC Capital Markets. Gold miner free cash flow is getting ready to explode. I want to explain real quick why gold mining stocks are so lucrative, but for certain periods of time. They're not, and why they're not buy and hold. You can see this goes back to the first quarter of 2018. It shows free cash flow for basically the producers that RBC covers. They don't give a list, but this is for illustrative purposes. So basically, this is why I think there's such an opportunity in gold stocks right now, especially the producers. So let's have an experiment here for illustrative purposes. Let's say that you own a gold mine, okay, that produces 1 million ounces a year, okay? And the cost, all in cost to produce 1 ounce of gold is $2,000 an ounce, okay? So you produce 1 million ounces a year and it costs you $2,000 per ounce to produce each ounce of gold. Okay, let's say the gold price spot in the market is 2,000. Well, you make no money. You broke even. Okay, you produce 1 million ounces for 2,000. You only get 2,000. You covered your costs. That's it. So this is where the leverage kicks in. Now we've seen the gold price move from basically 2,000 to around 2,400, close to 2,500, somewhere in that range. Let's call it 2,400 for the sake of discussion. So now, instead of you produce gold 1 million ounces at $2,400 an ounce, and your cost is only 2,000. Now, this is for illustrative purposes. Obviously, your costs are going to go up over time. But most of this mining, once the mine's up and running, are basically fixed cost businesses with slight changes for fuel and labor over time. But regardless, you see the difference now. You were still producing 1 million ounces a year for $2,000 an ounce, but now you're getting $2,400 an ounce. So now your cash flow just went from zero, you broke even, And just to move from 22,000 to 2,400, which is basically a 20% move in the gold price, yields $400 million in cash flow. This is why gold stocks can move. This is why they are have leverage to the gold price. Not every, and each company is different. I'm making general statements here. Okay, it depends what the cost structure is, depends on a lot of things. But in general, this is what this chart is showing. And so we're getting ready to see, as the gold price stays up here or moves higher over time, which I'm anticipating, we should see higher cash flows, right? Higher cash flows translate into what? Higher dividends. It translates into higher profits, possible buybacks, a whole bunch of different scenarios that weren't present before, okay? And so this is why mining can be very lucrative for short periods of time. Now you can see that fluctuates all over the place. There's times when gold miners have negative cash flow or very little cash flow. So it depends on the cost structure and the leverage they have and what the gold price is. So this is why gold mining and precious metals, any mining is very lucrative. That's why it's best to buy these companies when, for example, this is why the uranium stocks did so well, right? Because basically it was costing, back when uranium was selling for $15 or $20 a pound, the cost to mine it was $35 or $40 a pound, and the companies couldn't make any money, okay? And so they shut production down. The marginal producers shut down or go out of business. People leave the industry. There's a lack of capital investment, and that created the conditions we're in now, where we have this period. And then Fukushima basically zapped the market and made sure that you weren't going to have any investment because the price was crashed for a decade. And so now we have to do all this catch-up investment, just as the zeitgeist has changed towards nuclear power. And so that's why that is so lucrative. And so understanding the cycles in the different commodities, understanding cost structure, understanding the leverage that mining companies can have to these commodities is what gives you the opportunity to make a tremendous amount of money. They're not buy and hold investments, okay? You should typically want to buy things when the cost of production is higher than what the realized prices are, because these prices for these companies will be low, but it won't stay low forever. That's the time to be buying. Buy when the cost of production is less than what they could, or the cost of production is higher than what they can sell the material for, and right before the industry inflects. That takes work. That means you have to understand the cycle of each commodity. You have to have some insight into supply and demand of the industry. This is why you can make a tremendous amount of money in these stocks, but you really have to know what's going on. You can't just, go off internet memes or so-and-so said this. You really have to do some work. It's like any endeavor, right? If you want to make money and anything, you have to work. So that kind of feeds into what I'm looking at here. Here's, gold stocks is represented by the HUI gold index. Here's the current gold price. Typically, the gold stocks will front run the gold price. That's what we've seen in the past. They've underperformed. I believe this will catch up with the gold price. That's why I think that there's tremendous opportunity in the gold stocks. So here are some comments from the CEO of Schlumberger. Schlumberger reported earnings. Obviously, they had a conference call. This was a slide that I took from Tommy Deepwater's X feed. Offshore oil development longer for better. I think the CEO of Schlumberger is from France, so I think he meant better for longer, but I just think that was kind of chuckled when I saw that. But what's he talking about? Let's look at what he was saying and why offshore oil development and offshore oil services are so still have a lot of potential in my mind. And in fact, has been one of the best performing sectors in the portfolio, in the AIA portfolio, with a lot more to come, in my opinion. So he says, it's a longer for better outlook. It's a market that has multiple legs. If I was to list all the deepwater basins currently under production in future FID is final investment decision. That's kind of like making the decision to move forward with the project. And future exploration, I think it would be a long list. What characterizes this cycle? It's very broad in terms of region of the world. And then he goes on to say, first and foremost is that the deep water assets from oil and gas are typically geologically very strong assets, and they receive the utmost focus and priority when the international oil companies are hiring in a portfolio. And then he goes on to say, we see FID growth, we see exploration growth, and we see existing deepwater basin very solid going forward, hence a very resilient and multi-finger and multi-legs. He's talking about deep water. That's quite unique. It's not one basin, it's constrained by some rate capacity, and it's shifting to the right some extent, but it's longer for better. It's elongating. So basically what he's saying is, what he's seeing offshore is, and they have their finger in everything, onshore and offshore. So they are seeing what's happening. They talk to all these IOCs, they talk to the NOCs. They know what's coming down the pipeline. So this is another sector that I think really has moved in some respect, but I still think has a lot of meat on the bone. People have asked me, well, how much does it have left? Well, I haven't seen anybody. I mean, rates are increasing for offshore service vessels, platform service vessels, drilling rigs. The amount of manufacturing capability of people that provide the underwater control devices and piping and all that stuff, their order books are going up. Their book-to-bills are above 1, which means they're having more orders come in than they're fulfilling. So everything's going in the right direction. Until we see rates stay up, move to like ludicrous levels and stay there, we're not going to see anybody be building more boats and rigs, because we're still in that environment where the shell shock hasn't fully worn off. Now, we did see an order for some 4-8 service vessels, and people were starting to panic. But until we see a bunch of people come in, you want to see what you kind of see like in container shipping, right? Where rates went up during the pandemic, and like every yard now is building a container ship. You don't want to be in container ships because this wave of new vessels is going to come on and overwhelm the market. So until I see indications like that, where I see dozens and dozens of boats being ordered, or somebody goes and says we're going to order 5 $1 billion rigs, then you'll know. But rates will be substantially higher, and these companies will have cash flowed a tremendous amount by then. But that's probably at least a couple few years away. We're just not seeing that. And we're kind of in a sweet spot for oil here, somewhere in the mid 70s to mid 80s. If you go and look at I have some of these international oil companies in the dividend portfolio. They can't, if they're even just these huge behemoths that aren't managed properly, people can make those arguments. They're just beside themselves, in spite of themselves, generate tremendous cash flow. And so we're seeing it being directed into buybacks and things like that. So I think it's tremendous. You're going to see dividend growth there. You're going to see buybacks. You're going to see, there's still, some of these stocks have already moved quite a bit, but I think there's, again, a lot more meat on the bone. I've said before, maybe we're in the 3rd or 4th inning of this game. So, kind of a 9-inning ball game. So anyway, that's from Schlumberger. Longer for better, as the CEO says. I think he meant better for longer, but again, ESL. So this news came out. It didn't really get reported because this doesn't fit the narrative, right? Argentina posts best month under Milei. Argentina's economy recorded its best month in May since President Javier Milei took office last year, as investors look for signs of recovery from another recession. Economic activity rose 1.3% from April, that's the month before, above the 0.1% mean estimate from analysts in Bloomberg, and the first month of growth since Milei's term began in December. From a year ago, the proxy for gross domestic product grew 2.3%, defying expectations for a decline of similar magnitude, according to government data published Thursday. Milei has implemented drastic spending cuts that have helped cool monthly inflation to 4.6 in June, from a decade high of 25.5 at the end of 2023. So we'll see if this green shoots continue. I hope it does. This guy's really a trip. I like listening to him. I was actually shocked and surprised that he was able to get as much of his agenda through that he got through with the legislature. But, if this thing turns, I think there's a tremendous amount of opportunity. It's cautious optimism right now. A lot of people are suffering there. Standards of living are down, poverty's increased, homelessness has increased. But you have to, if you had all this nonsense and government intervention and mismanagement for decades, it's not going to turn around in like 6 months. It takes time. But human, the human ability to be resilient and to want to do better. If you put the right condition, if you want to grow tomato plants and you put the right conditions in place, you're going to get a bumper crop of tomatoes. If you create an environment for economic growth and activity, people are going to respond, and there's going to be, people are going to, seize that and take advantage of it. So we'll see what happens. I still own a few shares of YPF, which is the state, which is the oil company there. I'm really interested in that Vaca Muerta development. Even during the previous administrations, YPF did a really excellent job, I think, operating. So if they get into a situation where regulations are cut and overbearing government, I mean, what could really happen? And of course, with economic growth comes energy usage, increases. Not only is YPF a major oil producer, it's a major gas producer also. So we'll see what happens. Interesting what's happening. We wish them luck, and it's really interesting to watch this and see if it can get a foothold and be a turnaround story. Again, this is a potential to go from terrible to less bad, right? Or even from terrible to good. We've already seen a decent move in some Argentinian stocks, but it may be time to take another look at them if you haven't. So now we're going to get into the political and social commentary that some people don't care for. Wanted to point this out in the news this week. Elon Musk said he's going to move the X and SpaceX headquarters to Texas from California. Why? Because of the recent legislation in California that the legislature passed. I think the context was if you have your kid at school declare that they're transgender, that the school doesn't have a responsibility to tell the child's parents, so they can, keep that undercover, right? And Musk, he has like 10 kids, I think. He's really pro kid, pro family, pro procreation. I wouldn't say pro family because I think he's got 10 kids by 3 different women or something. I don't know. I don't know the man. I don't want to criticize him, but he's definitely pro kid. Let's put it that way, and having more kids. So he's moving to Texas. And this is kind of symptomatic of the whole, what we've seen in the past around what I've been talking about even several years ago when I first started the channel, when the guy from Domino's moved the headquarters from Illinois to Florida, I believe, because of the ridiculous regulations and taxes. So this is from U.S. Global Investors. Progressive states have lost tax income to taxpayer outmigration. And this really accelerated during the pandemic because of the oppressive governments and some of the tactics that were taken to supposedly deal with the pandemic in some of these statist places, particularly these blue states. And so what you see here, this is from 2019, like the year prior to the pandemic, to 2022, the cumulative gain, loss, and adjusted gross income in billions for these states. So California, New York, Illinois, New Jersey had these outflows. California had $80 billion of outflows. New York, 67 billion, Illinois, 35 billion, New Jersey, 14.5. And who were the beneficiaries? Well, they're states that are red states that have a perceived better tax environment, better business environment. Especially like Florida had a big influx of people, because you have to give Governor DeSantis credit. He pretty much did do a good job standing up to the nonsense around this pandemic and the overbearing government and, all these mandates and everything. And so who were the big beneficiaries? Florida, Texas, South Carolina, Tennessee. So I think you're going to see this continue. Again, back to what I said before, it's not, people don't just make their only decision based on the taxes that they pay. But what's interesting is who's leaving these states, not the welfare recipients, not the people that are just, working stiffs. A lot of these people are like productive people that are like middle management, upper management in corporations. Entire corporations have moved headquarters out. Business owners, It's just the quality of life is down, the overbearing nature of government, and the, iron fist with a velvet glove on it. People are tired of it. And so people forget that the United States is 50 separate countries in this republic, right? 50 states, if you will. And so they compete against each other. And so if you create an environment that's more, people say, well, Texas doesn't have what California has. Okay, well, you're right. It's very, California is like the 8th largest economy in the world, but you can squander and give away all of your advantages. And that's what California is doing. In my opinion, that's what a lot of these states are doing. A lot of them had tremendous advantages, and they're giving it away. And so it's going to go to places that are going to welcome and be conducive and create a habitat for liberty, freedom, and prosperity. It's just that simple, guys. So this is something that ticks me off. I want something done about this. I'm tired of this. This kind of goes back to my whole discussion around the parallels that have been shown between, this decrepit, Soviet Union when it collapsed, and the internal contradictions. They had a tremendous problem in the Soviet Union with alcoholism. Even today in Russia, they still do. It's a lot better than it was during Soviet times. But what I want to point out is there was a lot of, can you imagine living there? You don't have any prospects. It's kind of drudgery. You got to stand in line for stuff. When's this going to change? They keep telling us it's going to get better, blah, 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 blah. You see the signs when you're driving on the train. Socialism is bread and electricity. This, 1930 stuff that doesn't apply anymore. People are tired of hearing, we're going to build 20 million square meters of new housing. They had the lady welder with her welding thing up with a smile on her face. I collect all this Soviet agate prop, so it's interesting, so to me. But anyways, so one of the worst conditions that a human can have is depression or despair. Okay, in orthodoxy, it's one of the worst things you can have, right? Because it's very hard to get out of. And your outside conditions if you're certain people, a lot of people will allow what's happening to them or their environment or their habitat to affect them. It's just how it is. We're emotional creatures. We're spiritual creatures. And so if you're beaten down spiritually, emotionally, some people seek substances to alleviate that condition. And so in the Soviet Union, it was alcohol. Well, here in the US, the big thing is, opioids. And what I'm showing here is, you can't really see because it's fuzzy, the per capita drug overdoses and deaths. But this 1999, you can see the kind of the heat map, if you will. Obviously, they had more. It's like 20, I think it's 20 plus per 100,000 opioid deaths, where you see this really purplish areas. And then you look at 15 years later. I mean, this is out of control. And then part of the article I think I read here said there was 800,000 opioid deaths in the U.S. since 2010. That's 1 million people. I mean, only 57,000 people died in the Vietnam War, right? This is like 2 times the amount of casualties we had in World War II. This is out of control. Something needs to be done, okay? And this is what's happening. I've also talked about, how I've built a lot of wind farms and solar farms or what have you in a lot of these rural areas or areas of the Rust Belt, where a lot of the manufacturing and a lot of the it's been hollowed out, and the prospects have been taken away. And that's why you're seeing this rise in populism, I think, in the US, because I'm not sure that it can be fixed at this point, but the hollowing out, the conditions put in place to cut costs, move manufacturing, move all this stuff overseas, so that a small minority of the managerial class can reap all the benefits, has resulted in millions and millions of people not having very good prospects for the American dream. And this is not what this country's about, okay? And I think that's why you're seeing this. That describes Donald Trump. It's not about him personally. It's this populist upswing because people are tired of it. Is there any reason why a family of 4 is paying $1,500, $1,200 a month in insurance premiums? with a $10,000 deductible. This is insanity. Okay. These opioid deaths. This is insanity. Open borders. This is insanity. The hollowing out of the manufacturing of this country. Insanity. Okay. These foreign wars that have no benefit for the average person in the US. Insanity. The depreciation and ignoring the infrastructure of the United States. The American Society of Civil Engineers says that grades are infrastructure. They say it's D, I think D minus now. Okay. Unacceptable. And yet this small group of the managerial technocratic class based on the coast and in Washington, D.C. just wants more, more, more. Okay. And that is why you're seeing somebody like Donald Trump tapping into that outreach. And then you see this despair that's present in the country because people don't have prospects. People have despair. And so they try to medicate that with opioids. And some of this is also, all these foreign wars we've been in and all these people come back having fought in these wars and all the stuff that they have to go through during that, killing and the death and all the other things. And the fact that when you get back, you finally realize what was the point of all of that. And then these people are not taken care of properly. They're not given therapy. They're not, they just throw them out on the street. And so these people start self-medicating. Or somebody goes and has a surgery for their back and the doctor gives them, some opioid by that, whatever that, that people knowing full well that these are very highly addictive, then they cut them off and then the people are forced to go, people have addictive personalities. There's all these things happening. Everything is upside down. And this is just symptomatic of it. And so, Victor David Hanson wrote an article showing the parallels, kind of like the Brezhnev era when Brezhnev got sick and he was still in power for several years, but he was like he wasn't able to, kind of showing the same parallels. The internal contradictions that the U.S. has, the geriatric leadership, running an old playbook that doesn't work anymore, okay, for most people. Of course, you're going to see people are upset. And some people are, I think a lot of this has to do with this. This open borders isn't helping things where people can just walk across. I live down in the valley here. You stories all the time. I could take you to areas where you can just watch the people walk across and drug mules and stuff like that. It's not hard to find, okay? And it's easy. All of these problems in my mind can be addressed. It's just the lack of political will. And so you have to ask yourself, is that by design? And that's a conversation for another day. But anyway, I think this is a big problem and it needs to be dealt with. It's just totally out of control. And it's the whole entire country. I mean, look at Alaska. They had like one area there, okay, and now look at the state now. I'm crazy. Look at New Mexico. What's going on in New Mexico? It's crazy. Look at Appalachia, West Virginia, Kentucky, Tennessee. Okay. I mean, it's crazy. Look at Florida. So yeah, this only goes to 2014, by the way. So anyway, not good. And this is not, when people give me this Team America puppet show, USA, USA, what are they talking about? What are they talking about? So we have to talk about it. I put it up here, iconic. I don't care if you like it or not. This is like one of those pictures that's going to be an American type picture forever. Here you have a guy, a former president, an assassination attempt. He's hit. He's got blood on his face. He goes down. The Secret Service swarms him. He stands up, raises his right fist in defiance. You got the U.S. flag in the background. I mean, if this isn't divine providence, guys, I don't know what this is like. This is when the election was won. Donald Trump will be elected as the next president of the United States. I mean, with all of his faults, with all of his issues. I mean, you're seeing it on social media. People that never even considered voting before or voting for him, or people that used to hate him. Maybe it's anecdotal and I only caught the 4 or 5 people that said that, but I'm noticing something's happening out there. This is like I'm hesitant to put this picture as the same level as like raising the flag on Iwo Jima, but this is going to be one of those iconic pictures, guys, in our history, whether we like it or not. Now, let's get to the actual point. Look, I don't know what happened. No, we're never going to know with full certainty. I'm extremely disappointed in what I'm seeing as the after facts. Okay. I always go with Occam's razor. What is the most likely answer to a question, or the most likely explanation? And the most likely explanation is just levels of incompetence. We've talked about this over and over of how incompetent and the lack of competence we're seeing. I mean, we have tires falling off of planes and doors flying off of planes. You see it if you're in business or in industry, just people in the wrong jobs for DEI reasons or affirmative action reasons or political reasons or Peter Principle reasons. And, it wasn't like that when I first entered the workforce. Yeah, the boss's son would get in there once in a while and people would just kind of ignore him, or it's a pain in the butt. But now we just have this state-sponsored, you know, lack of competence, putting people in positions where they shouldn't be. And this is what, I think is the most likely explanation. The more and more I hear about this, it's just total incompetence all the way around. There should be congressional hearings. This Secret Service lady person that's in charge has no shame. She should resign. She should have resigned. If she won't resign, she should be fired. There should be a total revamping of the Secret Service and all of these agencies. Okay. This should never happen. This should never happen. There was, and you can protect these people. You can. I mean, I'm not an expert on this, but I've listened to enough of the experts now. Dan Bongino, who used to be a Secret Service person, has been all over on podcasts and on his own show and on YouTube showing what they should have been done and what didn't happen. Okay. And so there has to be consequences. There has to be change. You cannot, if you want to, in an insurance company or, your local bank, if you want to put some incompetent in charge of the local office or branch, I guess, you can do that and society won't collapse. But in, like running critical jobs, we can't just put incompetent people in there so that we can be virtuous. Okay. We have to put people that are qualified into jobs that have, where the outcomes of failure are serious. And this is what we don't do. I mean, look at our military, for example. I could just go on for hours. I'm not going to. We've talked about it before. I will say this. I think President Trump's going to win. He's going to win overwhelmingly. I don't know if the Democrats are going to get Biden out or not. I don't know what they're doing. There's no way he can compete with Trump now. I mean, it's just impossible. If they do pull Biden and put Kamala Harris in there, I just don't see that happening. She didn't get one delegate during the Democratic nominating process. No one likes this person, and she's a total zero. It's just she's in there because she checked some boxes. They wanted a black female. She's not. I mean, she's half Jamaican and half Indian. She's not. I mean, she's not like. It is what it is. It's just this whole Brundle fly political correct virtue signaling. How are you going to compete against this? This is like a marketing dream right here. This is like if you were going to make a movie, this is how you would do it. So that's why I say it's divine providence. I mean, the guy turns his head right at the right second, millisecond, grazes him, the blood on the face, not too much blood, but some blood, getting back up, raising his fist in defiance, fight, fight, fight. American flag in the background. You can't make it up, guys. You can't make it up. So we'll see what the outcome of this is. This woman has no shame. She should resign and go away and tend her rose garden or whatever she does for hobbies, collect stamps, and never be seen again or heard from again. But in fact, that, as far as I know, up to this point, hasn't happened. So we'll see. I wanted to end on this note. I will point out one thing. I told somebody this week. Don't get caught up. We are in terminal decline. And I'm not saying that Trump can't make changes. He put together a decent Supreme Court. You got to understand what has happened with the special interests. I don't like saying the deep state, but these special interests that control our government, okay, have been entrenched for decades. Getting them out is going to be very difficult, okay? And it's not going to happen in a 4-year term. And a lot of the people that are in Congress, we have laws, coming in and saying, well, we're just going to reduce the federal bureaucracy. They have laws. You can't go in and fire everybody. That's not how it works. You can't do that. Now, if I told this person, if the following things happen on the day that Trump's inaugurated, assuming that he wins, because I'm sure the Democrats are going to try to cheat again. That's what they do. They don't want to give up power, and they're scared of this guy because he's a wild card. They're scared they're going to be held accountable finally. Some of these people have engaged in a lot of criminal behavior. So assuming he wins, okay, which looks likely, what can he really do? So if he comes in day one and pardons all the J6 people that were nonviolent offenders on day one, okay? If he opens up all the JFK files and UFO files, and all these files, and says, here you go, unredacted, here it all is. If he does that, if he puts an immediate moratorium on federal hiring, because we just had that, most federal employees now have been hired of all time, okay? We have more federal employees than we've ever had. If he puts a moratorium on hiring in, if he does things like that, if he tells the Congress, send me a budget, or I'm going to veto, we're not going to do these continuing resolutions and play around, send me a budget. And if he does things like that, then if he cuts off the funding to Ukraine, which is still up in the air, he's not going to cut off the funding to Israel. Every politician in Washington is fully behind Israel. If he does things like that, then I'll say, well, they're going to go for it and maybe they got a shot. But, when he was flying to Milwaukee, I read that he had Lindsey Graham on the plane with him. Lindsey Graham. Swamp creature. You saw the reception of Mitch McConnell at the RNC convention. He got booed. People don't want these Mitt Romney, Paul Ryan, Jeb Bush family people in there anymore. They don't want that. Okay, so we'll see. Politics is kind of a dirty business. You can only do what you can do. It's the art of compromise and deal making. And so don't get your hopes up. Don't invest your hopes in sons of princes and princes, because I think you may find yourself to be disappointed. Not a black pill. We'll see what he does. If he gets in there, first you got to get elected. Maybe somebody else takes another shot at him. We'll see. I mean, there's a lot of insane people and mentally disturbed people that have been really riled up over the last 10, 15 years. I mean, think about this, guys. Whether the guy was a patsy and it was a conspiracy, or whether he just did it on his own and the entire sheriff's department and Secret Service and law enforcement in that area is totally incompetent, which is probably what happened. A 20-year-old kid goes up on a roof to shoot a presidential kid. When I was 20 years old, I was looking forward to my future, how I could get better in my trade, how I could make more money. I was interested in girls. I was lifting weights. Had friends. Why are we in a state in this country where a 20-year-old kid goes up on a roof of a building to shoot a president? What did he think the outcome was going to be? And now he's shot in the head by the sniper. That is a question that we should look at, of how sick our society is. And, when this Team America puppet show, USA, USA, is nothing but a facade. So don't get overly excited. I'm kind of finding this amusing and liking this. But, we'll see what happens. I wouldn't count on major changes. You are living basically through Gibbon's book, The Decline and Fall of the Roman Empire. And there were times during the fall, which took several centuries in Rome, where there were, certain emperors that came along and kind of stabilized things. But in the end, the decline continued. And I think that's what's going to continue here. You have to do something about the debt. You have to do something about these entitlements. Mr. Trump is an MMTer, just like Mr. Biden. He wants big tax cuts and more spending. And so I wouldn't get my hopes up. You know, as goes the U.S. dollar, goes the U.S. And what did J.D. Vance said? We need to devalue the dollar to help U.S. exporters. So I'm just telling you, I wouldn't get too excited. But anyways, I find this very amusing and entertaining, and you can't deny it. This guy's something else, man. And there's something there, there's something going on there. So we'll see what happens. All right, guys, that's it for this week. We'll talk to you next week. Thanks for tuning in. And like I said, visit my Substack, get that free email every week. I think you'll find it useful. And again, take a subscription to the AIA newsletter if you're so inclined. Talk to you next week.